Well, good afternoon, everyone. Jack McGrath with ntmarkets.com. Well, it's kind of an interesting day where they did take the market up early on. We had said that Blue March we were looking to sell 64 to 66s. Today's high was 64. And by the end of the day, and even after the close, the market was under pressure. You're basically trading back down on the lows. Now we've forwarded out two more, the Blue March chart and the Blue June chart. And it's interesting, these lows that we're putting in, if you draw the line across, it's like the shelf before the cliff. And we're going into this Fed meeting, and basically people are looking for the Fed to save this market again. It's going to be probably most likely on its lows, or maybe even starting to make new lows from here. And if we get the continuation from these levels, this market could really get smoked. It could fall out of bed. The objectives off these Blue March and Blue Junes are 40 basis points lower. So it's really it's going to be interesting to see what happens through this Fed meeting. And don't forget, you get the non-farm payrolls on Friday also. So we do have some important data coming up here to for the market to react off of. And I think the mindset is where people are looking for the Fed to save this market again. And if you look at the 10-year, traded up to 15.5, 14.5 to 16.5 was our selling area. 15.5 was today's high. By the end of the day, you're back down pushing on the lows. 3.5 was the low. I want to keep an eye on 131.03. I think that's the same type of thing in the 10-year. If you start to take out 31.03 and start closing below there, I think you got another big trade in the notes as well. So we'll be watching that. And the equities just continue to be resilient, pushing up, again, making new contract highs, new highs for the move. If you look at the S&Ps, 1505 3/4 was the high today. And back in April of 07, 1505 was the high. So we sent another monthly continuation chart out in the S&Ps. Have a look at that. Above 1505, then we're just following this line up. It is a huge, massive rising wedge, but we could just continue to follow that line up. 1050 was the August of 07 high. So if we continue to hold above this 05 level, look for 1050, and then we'll just keep looking at these old 07 highs off this monthly chart. So that's another thing we'll be watching. When it turns, it's going to be massive and violent. But right now, it's just the grind higher, and you can't really fight it. So buying dips in the S&Ps has worked over, the past 2-3 weeks? Since the new year, actually. So we'll see if, we can get some kind of reversal pattern, anything to give you the heads up that the market's tired up here. But right now, we're not seeing that. We just continue to make new highs. New contract highs are good, and higher lows. We'll be watching for that. So that's it for this afternoon. Have a nice evening. We'll pick it up bright and early tomorrow morning. Thank you. Jack McGrath with ntmarkets.com.